guys, welcome back to the channel. This is Grounded Life Finances, and we are Allie and Rob. And what are we talking about today?
Today we're talking about why we sold Google and Carnival stock recently this week. We sold some of Google and we sold all of Carnival. So we're going to break down why we did that and if you should be thinking of doing the same thing. We want to preface this with saying that our style of stock investing is that we try not to sell at all, ever. So if we do sell something, either something bad has happened or maybe something really good has happened too. So let's break it down for you. We'll start with Carnival as to why we sold that. And the reason is pretty simple for Carnival. We are full-time travelers and we did a lot of cruises earlier this year. We did like 9 cruises. And 2 of them were on Carnival ships, Carnival and Holland America. Mm-hmm. They were transatlantic crossings, and if you own Carnival stock, if you own 100 shares of Carnival stock, you get an onboard credit. They were 14-night sailings, so we were going to get a pretty big credit. So we were really only owning them for the onboard credit. So you can kind of break down for everybody what you get for owning Carnival stock.
Yes, so it's really quite fantastic to have this benefit of owning the stock, and that is, as you mentioned, if you do 14-day or more sailings, you get $250 of onboard credit, and then if you're doing 7 to 13 days, you get $100, and anything under 6 days, you get $50, which is a really great benefit. I mean, we got $500 just on those transatlantic sailings.
Right.
We did one on Carnival and one on Holland America, which is owned by Carnival. So that's a fantastic feature. And actually, a lot of people were thinking that they were going to do away with this this year. And it looks like they have reported that they're going to extend this through July of 2024. So that's kind of a excellent news, isn't it?
That's good.
But maybe not so much for us now.
Not for us now. No. So the deal was the stock was only trading at about $8.75, which is what we bought it at. We bought 100 shares, so we spent $875 to get a $500 onboard credit. And the thinking was, when we're done with the cruises, we could just sell the stock. Hopefully, it stayed around the same price, and we would, only profit the onboard credit and kind of break even on the stock. Well, what happened was, since we bought it, it has now gone up, and it's $17.16 per share. So we thought, we don't really believe in Carnival as a company. There's a lot of risk involved. We love them as a company. We don't love them as an investment. Mm-hmm. So we decided, let's just sell out of it now, because we've already made $9 per share. That's $900 plus the $500 onboard credit. So we've already profited $1,400 on this little stock purchase from a little bit ago. So
this little big investment of sorts.
Yeah, a little investment. So that was kind of like a no-brainer. We're out of that position completely, and we have closed that out. And the question people will have is, well, should I buy it now for the onboard credit? If you're only going to get $50 or $100, it seems like it's a little bit risky. But if you're doing like we were and you're going to be benefiting $500 from it, sure, go for it. It's probably not going to go down that much just while you take the cruise. So that's why we sold out of that. That's one reason to do it. Circumstances change of the company, or your circumstances change.
Right.
That would be a reason to sell a stock. Second stock that we're going to get into that we've sold is Google. And this one really hurt me to sell because Google is probably...
You were pretty heartbroken.
Google is probably our favorite company. I didn't sell all of it, though. Mm-hmm. So Google is, it's probably our favorite company. We love Google. And I think it's just an incredible stock. But our average cost per share of Google is at $67. And we actually had bought a bunch more at $100. A few months ago, and what happened was Google has gone up quite a bit. It was sitting over 130, and now as of today it's 128.54 per share. Problem with that for us specifically is that now with it going up so much and us owning so much of it, it makes up 10.78% of our portfolio, which is way too much.
A little bit too much.
A little bit too much. And you throw on top of that we make our living partly through, Google. So it's kind of a double whammy of non-diversification because we do YouTube, we have blogs, we have other income, of course, as well, but it does make up part of our income. So really,
That's really a lot of Google into the final tally of the numbers at the end of the day.
And while I don't have any trouble with Google, advertising downturns we know can happen, and if an advertising downturn happens, it's going to not only hit the stock but hurt our income as well. So again, for us personally, that's a reason to sell Google. So we took profits, like I said, we bought it at 67 on average, and we've sold it at 128.54. Actually, we sold it in the day, so it's a little bit different than that. But we're pretty happy with that, and now we have a little bit of money to reinvest. We haven't bought anything in the last 3 months, really, because we generally tend to have all our money invested. We think that's the best thing. So now we'll be on the lookout for something else to invest in.
What to invest in.
When the time is right. But that's why we sold these two. It doesn't mean you should sell them. It doesn't mean you should buy them. But we wanted to give you an idea of looking at your own personal life. And that's why you can't just take the advice of some guru that says, buy this, don't buy this. Because what may be good for them may not be good for you. You have to really look at your life, what your goals are, and figure out what the best investment is for you. We're going to give you guidance along the way as to what we're doing, and not only what we're doing, but why we're doing it. That's probably more important to help you make good stock purchasing decisions.
Yeah, so we're going to continue, like you said, to share information like this along the way. We do have a few other videos of some other things that we've done and what's in our portfolio. We'll share a little bit more about that as we go along, but hopefully this will help you guys as you're continuing to make some financial decisions. Guys, don't forget to subscribe to the channel. Give us a like. If you have any questions, leave those for us in the comments.